Palantir's Q3 results delivered a clean sweep, beating expectations on both top-line revenue and bottom-line earnings. Perhaps most notable was the company hitting a record high in its Rule of 40, a key metric that combines revenue growth and profit margins. This signals that Palantir isn't just growing quickly, it's also improving profitability, a combination investors love. The company continues to expand its private sector footprint while maintaining its dominant government contracts, showcasing a diversified revenue stream that supports long-term stability. These fundamentals make the post-earnings dip feel less like a warning and more like a market overreaction. After the earnings release, PLTR shares retraced sharply, a move some traders attributed to short-term profit-taking or reactions to market commentary. The stock fell from roughly $220 in after-hours trading down to near $190, creating a potential entry point for long-term investors. Despite this pullback, Palantir's broader uptrend remains intact, supported by solid technical levels. Analysts point to strong support around $185, suggesting that the dip may be temporary and could set the stage for further gains as investor sentiment catches up with the fundamentals. Management's outlook for Q4 and the full 2025 fiscal year is another positive sign. Palantir raised guidance for both revenue and EPS, projecting industry-leading growth. The company's balance sheet is solid, and free cash flow remains strong, giving it flexibility to invest in innovation and expansion. For long-term investors, this combination of record performance, guidance upgrades, and robust cash flow makes PLTR an attractive growth play, particularly for those willing to hold through short-term volatility in exchange for potential upside over the next several quarters. Despite some after-earnings selling pressure, potentially influenced by high-profile short positions, including from Michael Burry, analysts continue to see value in Palantir at current levels. The stock's premium valuation is justified by its growth potential and technical support around $185, with stop-loss levels suggested below $170 for risk management. In short, the pullback could be viewed as a gift for investors ready to capitalize on a company showing strong fundamentals, expanding market presence, and a positive long-term trajectory. For anyone following tech and data analytics, Palantir's latest performance is a story worth watching. If you're watching the tech stock space this week, one name has been making serious headlines: Palantir Technologies, ticker PLTR. The data analytics giant just released its Q3 2025 earnings, and the numbers were nothing short of impressive. Revenue, earnings, and the so-called Rule of 40 all came in above expectations, signaling strong growth both in government contracts and private sector deals. Yet, despite these stellar results, shares pulled back sharply after the announcement, dropping from around $220 to near $190. For investors, this pullback may not be bad news. In fact, it could be a rare buying opportunity. Today, we're breaking down what the results mean, why the stock dipped, and why some analysts remain bullish on Palantir.